Greetings. Welcome back to IBI India Business Insights. Just as we were coming out of COVID-19 pandemic and the resulting slowdown, the Russia-Ukraine crisis escalated. How has this affected India's growth? Are the current GDP estimates and projections good or bad? What about the nature of economic recovery? Keep watching to know more. To keep yourself abreast with news and get regular insights on the Indian economy and business, please subscribe to our channel and click on the notification bell. Foreign exchange reserves. The foreign exchange reserves have fallen by $89 billion in 10 months to $553 billion as of mid-September 2022. India's foreign exchange reserves has slid nearly 14% from the peak. They are projected to drop further due to the valuation changes arising from the appreciating US dollar. Between April to August 2022, India's trade deficit has also widened to $125 billion. In what would be a relief, inflows from foreign portfolio investments have been positive since July and were over $6 billion USD in August 2022. The Indian economy expanded 13.5% year-on-year in Q1, the most in a year but less than market forecast of 15.2%. The World Bank also recently downgraded India's gross domestic product growth rate to 6.5% for the fiscal year 2022-23 from an earlier estimate of 7.5% owing to the spillover from the Russia-Ukraine war. The tightening of the global monetary policy by central banks all over the world is also a factor. Even though somewhat subdued as compared to previous projections, this remains the highest for any major economy. Professional forecasters polled in the September 2022 round of the Reserve Bank survey expected real GDP growth at 6.3% in Q2 of 2022-23. 4.8% in Q3 and 4.2% in Q4 for financial year 23. The agriculture sector grew 4.5% in the first quarter annually compared to 4.1% in Q4. The manufacturing sector grew by 4.8% in the first quarter compared to a contraction of 0.2% in the fourth quarter. The mining sector grew 6.5% in the first quarter compared to 6.7% in fourth quarter. The construction sector grew 16.8% versus a growth of 2% in the preceding quarter. Trade, hotel, transport and communication sector grew 25.7% in the first quarter compared with 5.3% in the fourth quarter. The financial services sector grew 9.2% compared with 4.3% over the same duration. Public administration, defense and other services grew by 26.3% compared to 13.8% in fourth quarter. The rupee recently hit a record low of 82.68 per US dollar as the greenback strengthened against major currencies. This is mainly due to the aggressive interest rate hikes in the US, risk-off sentiment among investors and the rising oil prices. On October 5, 2002, the Organization of the Petroleum Exporting Countries and its allies announced to cut oil production by 2 million barrels per day from November. Reduction in oil production will increase prices of crude oil further, which in turn raises concern over inflation and rate hikes. However, the rupee has held back well compared to other currencies against the US dollar. The latest round of depreciation is triggered by the geopolitical tensions caused by the Russian invasion of Ukraine earlier this year. The war pushed up commodity prices, leading to a record surge in inflation in the developed world, which have resulted in steep rate hikes by the US Fed. This has resulted in a flight of capital back to the US, thus resulting in currency depreciation episodes. The RBI has been deploying the dollar reserves to defend the currency and has used billions of dollars of currency assets in the fight. Bond yield. The Indian government bond yields are trading higher. The benchmark bond yield is currently around 7.5% levels on 7th October. This is primarily due to the RBI hiking rates in order to control inflation. The rising oil prices are also a factor. Earlier last week, JP Morgan decided to not include the country's local debt into its emerging market index. Meanwhile, the RBI lifted its key repo rate by 50 bps to 5.9% in its last September meeting, totaling 190 bps since the start of its hiking path. India achieved merchandise exports of 32.62 billion US dollars in September against 33.81 billion US dollars in the same month last year, while the trade deficit widened to 26.72 billion US dollars according to the preliminary data released by the Commerce Ministry. As for April to August 2022 to 23, it was 192.59 billion US dollars with an increase of 17.1% over 164.44 billion US dollars in April August 2021 to 22. Imports during the month, however, grew by 5.44% to USD dollars 59.35 billion as against 56.29 billion dollars in September 2021. This increase in imports was dominated by crude and coal imports. The non-oil deficit accounted for nearly 60% of the total trade deficit in August 2022, even though gold imports halved on a YoY basis. The exports during April to September 2022 to 23 rose by 15.54% to 229 billion US dollars. Imports during the period increased by 37.89% to 378.53 billion dollars. The trade deficit during the first 6 months of the fiscal has widened to 149.47 billion dollars as against 76.25 billion dollars during April to September 2021 to 2022. Credit rating. Conditions in the financial sector, which were a key growth impediment before the pandemic, have improved in recent years. However, Fitch reaffirmed its credit rating at BBB as it expects the Southeast nation's GDP growth to slow to 7.8% in the financial year 2022 to 23, from 8.5% projected earlier, as high commodity prices are set to dampen some of the growth momentum. Fiscal expenditure. The government proposes to spend 39,44,909 crore rupees, which is an increase of 4.6% over the revised estimate of 2021 to 2022. The receipts, including borrowings in 2022 to 23, are estimated to be 22,83,000 crore rupees, an increase of 4.8% over the revised estimate of 2021-22. The expectation from tax collections is higher than last year, which is expected to come in from direct taxes, both on personal and corporate income. This can largely be attributed to the revival in corporate earnings. Inflation rate in India accelerated for the first time in 4 months to 7% in August of 2022 from 6.7% in July, above market expectations of 6.9%. India's unemployment rate fell to 6.43% in September 2022, its lowest level since August 2018, and after touching a one-year high of 8.3% in August 2022, the latest data shared by the private think tank Center for Monitoring Indian Economy shows the jobless rate fell in both urban and rural parts of the country. In urban areas, the unemployment rate fell to 7.7% from 9.57%, while it dropped to 5.84% from 7.68% in the rural areas of the country. The September 2022 Consumer Confidence Survey of RBI shows that consumer confidence has been on the recovery path since July 2021. While people are confident about near-term recovery, they are not so confident about future consumption. Also, both current and future consumer confidence indices are well below the pre-pandemic high in March 2019. There is also greater visibility on spending on essential items, but people are not yet ready to increase their spending on non-essential goods. UBS India Economic Perspective Survey of affluent consumers shows that more of India's rich intend to increase spending in the coming days and expect their income level to rise going ahead. It bodes well for consumption in the economy if those with more disposable income loosen their purse strings. Elevated imported inflation pressures the continuing appreciation of the US dollar as well as changes in the food price outlook due to the late recovery in sowing augurs well for kharif output and risk of crop damage from excessive or unseasonal rains remain a risk for future inflation. The outlook for crude oil prices is also tied to geopolitical developments and remains highly unstable. Taking into account these factors and an average crude oil price of $100 per barrel, inflation is projected at 6.7% in 22 to 23, with quarter 2 at 7.1%, quarter 3 at 6.5%, and quarter 4 at 5.8%. And risks are evenly balanced. CPI inflation for quarter 1 2023 to 24 is projected at 5%. The improving outlook for agriculture and allied activities along with the growth in services are boosting prospects for aggregate supply. The outlook for aggregate demand is positive too, with rural demand catching up and urban demand expected to strengthen further with a typical upturn in the second half of the year owing to the festive season. Taking all these factors into consideration, real GDP growth for 2022 to 23 is projected at 7%, with quarter 2 at 6.3%, quarter 3 at 4.6%, and quarter 4 at 4.6%, and risk broadly balanced. For quarter 1 of 2022 to 23, it is projected at 7.2%. All in all, India experienced a sharp pickup in inflationary pressures following the rise in global commodity prices as well as due to adverse domestic weather shocks. Consumer price inflation peaked in April 2022. The outlook is, hence, riddled with uncertainties given the highly volatile geopolitical situation, elevated global financial market volatility, and recurring adverse climatic conditions. Monetary policy remains focused on ensuring that inflation remains within the target going forward while supporting growth. While the economy was showing strong signs of recovery, having achieved full recovery in 19 among the 22 HFIs, a report by the Reserve Bank of India in June suggested that the available high-frequency indicators suggested that global growth is losing steam in the quarter 4 of financial year 2022 and quarter 1 of financial year 23. Data from GSTN, the company that processes GST returns, showed that 75.2 million e-way bills were generated in April, lower than the 78.1 million raised in March. As for quarter 2 of financial year 23, July recorded 75.6 million e-way bills created, while a record of 78.21 million e-way bills were created in August 2022. This represents a 19% increase during the year. This is primarily due to a rise in shipments as the festive season approached. This indicated another month of all-time high GST collections in September 2022. Thank you for watching. If you like this video, do let us know in the comment section below.